Hello everyone, welcome to my first video. This video will be about market structure. This will be good for beginners to advanced. And for those people that are more advanced, they may be saying to themselves, I have a very good understanding of market structure, but the ultimate truth is, or the question shall I say, is are they actually profitable and do they truly know how market structure works? I found a lot of traders that chart market structure are doing it incorrectly and they generally are unprofitable. So here I am wanting to help out and show my view of how I view the market and how I chart my market structure, and hopefully it helps you. So let's start off with the free market conditions. As some of you may know, we have bullish case, where market is making a high, higher low, higher high, higher low, and higher high. So as you can see here, we got a high, a low, the breaker structure that created that higher low, making a new higher high. Price pulls back, making a higher low. Then we have a breaker structure which validates this higher low, making a new higher high. Now, what's important here is that as long as price break structure here, making a higher high, validating this higher low, does not break past this swing low, protected low, or higher low, whatever you want to call it, the trend will remain bullish. Price can come down here, tap it, and then just continue bullish breaking structure. That is an uptrend example. So the main point I'm trying to get at is, as long as this low does not get violated and does not break, we are still in an uptrend. In a bearish case scenario, we will be looking at markets making lower low, lower high, lower low, lower high, and lower low. Price is making low, lower high, breaker structure making a lower low. Again, this here would be the swing high, and as long as price doesn't break past here, price could absolutely break structure down, making a new lower low. So I hope everyone understands that importance. And then we have a sideways market, accumulation of buyers and sellers fighting between each other. This market has no clear directional bias. Don't even bother touching it. Try to avoid it, in simple words. We then have reversals. So we're going to start with a bearish reversal, where price makes a high, higher low, higher high breaking structure, but then makes a lower low, breaking or change of character, market structure shift, whatever you want to call it, but it makes a lower low. This is where people get involved for reversals, that the market was once bullish is now shifting bearish. Again, when price makes a lower low, this now becomes a swing high until this level breaks. Once it causes a break of structure, this then becomes a swing high, the lower high, and this becomes the low. Same thing for a bullish case example. We're looking at price making lows, lower high, lower low, higher high, pullback, and then a higher high. Low, lower high, lower low, change of character, market structure shift, creating a higher high, a pullback, then a higher high, creating a breaker structure. Again, price remains bullish while it's in between this leg here. Once it makes it higher high, it's a pullback, It remains bullish until we break this level here or we break this level here. If we break this level, it makes a high. We look for continuations. If it breaks below this level, then we are bearish. Okay? Now, advanced market structure. Advanced market structure, we see the market. Should I also mention with those reversals, which I drew before, these setups are lower probability. It's only a signal that the trend may change. It doesn't guarantee the trend has changed, it's just the first sign that the trend may change. And if you are taking setups based on this reversal pattern, the probability is lower compared to continuations. This is what I have back tested on, this is what I have collected data on, that reversals have a lower probability of playing out. Now, complex and advanced market structure. As we know, the market's never perfect. We have high, low, high, high, low, high, and then we may see that reversal play out here, where we get a sweep, a change of character, and making a lower low. But then what happens after? Price makes a new high, low, break a structure, high, low, break a structure, high, and then a change of character and a lower low. This is where people, traders, will start looking for shorts. And then what happens? Their stop loss gets completely obliterated and price makes a new high, causing another change of character bullish. What we need to understand here is that the original trend bias was a continuation bullish. And this is where I was saying that reversals have a lower probability of playing out because you're fighting against a trend. Again, we're going to do a bearish example here where the trend is now making lower lows, lower highs, lower lows, lower highs, lower low, and then we get a sweep here or a change of character, market structure shift, making a high to this lower high. And then what happens? The market reverses completely bearish again. Lower low, lower high, lower low, lower high, lower low. You've got those breaker structures, and then what happened? Change of character, making a new high, and then whether you call this a sweep, a manipulation, a liquidity, whatever, we reverse and break back bearish. And this is what fools a lot of traders. Why? Because they hold so much weight to these reversal setups that gives a lower probability instead of focusing on the continuation of the trend direction. So now that I have explained to you the few different concepts of how market structure actually works, let's now head to the charts and give some real life example of the chart of market structure. Now, as you can see here, we're looking at the DXY at current pricing on the 28th of March 2026. Let's start from this point here. This looks like a nice high. We got to break a structure here. High, higher low, and then we've got some sort of high here. Now, which high do we choose here? We choose the highest point, but I have a rule that a pullback must be at least 3 body candle closes. But for this case, example for this video, we won't use that rule. We're just going to look what looks most obvious in the external swings. We don't want to look at the rubbish internal swings, just look at the external points. So in this case here, we have a high here. The breaker structure, body candle closes, some rubbish price action here that went sideways and made a new high, and then eventually made a new high here, wicked it. Now remember here that price action could absolutely come down. As long as we don't violate this low, we are still bullish. That's the mistake everyone sees, is they think, oh, this is a high, but maybe there might be some sort of internal break here that causes the market to just come lower like that. It's still a bullish trend. Now, let's continue. We continue higher. We got a higher low there. Whether you consider that a high, maybe higher low, higher high, higher low, higher high. Whether you call this higher low here. And then what happened? Eventually making a higher high, break structure, higher low, higher high, break structure again. So as you can see here, the market is just continuously making high highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and higher high. And guess where the market's going to go now? Well, we've got a high point here, and we've got our swing low point there. So as long as we haven't broke past this high point here, price can play around in here if it wants. But we're still in the bullish range. Or shall we say bullish continuation trend. So that is the uptrend bullish case scenario of market structure. Now let's go to the bearish case example. Again, now let's just start from, where should we start from? Let's just start from here. Now we've got a break structure with a body. Here, a body close validates a breaker structure. If it was a wick, it doesn't count for me as a true breaker structure. So what's happened here is we had a low, we got a lower high, we got a lower low, maybe a lower high, but then what happened here? Price just wicked. Again, remember what I said. If price wicks, it doesn't validate a breaker structure until it body candles closes, which here it body candle closes. So now that body candle close validates this lower high, because that was the last lower high point until we made a lower low. And then what happened? Lower high. And then did we break? Yes, we broke with a body candle close. As you can see right there, we broke with a body just. Now we had this big news candle that went up, and we swept this high. Now this swing high, protected high, again, remember what I said. If it doesn't body candle close, it is not a break or a change of character or a market structure shift. It's just a sweep of liquidity and manipulation, whatever you want to call it. And then eventually, what happened? Price broke structure, bearish again, continuing the bearish trend. This here, rubbish. This was a new low for me, and that would validate that this is the last lower high. So as you can see here from this clear bearish case example, which is inverse correlated to the DXY, we have just been bearish, completely bearish. And the last swing protected level would be there, and that's a swing low there, and that's where we're at the moment. Now let's go to a sideways consolidation market, and let's go to GU. Let's zoom out. Where can we see price action that looks terrible? Alright, I think I already drew some things here before. This. So in this market condition, this is what I call an accumulation sideways market. But when does that actually happen? Right here, we can see, let's say, a high point here and a low point here. Now, we've got some internal price action going on here, where it was making some highs, higher low, higher high, but ultimately this is a swing high and that's a swing low. Then what's happened? We're just playing around within this price action, all in between this. And as you can see, price even swept this level here. making a new high, and then it completely dropped, taken out of a liquidity here. And then what happened again? We completely reversed up bullish. So this is the rubbish price action you want to stay out of. Now over here, we have the market made a break of structure here. Oops. Break of structure here. And everyone's looking for buys. So we had higher low. We got a higher low. Price fails to make a higher high because it didn't break this high. What happened? It came back for this swing low, protected low. At this point here, are we looking for buys or are we looking for shorts? That is the ultimate question. We now have a large range where price is not staircasing anymore. We've got an internal change of character here signaling that maybe the trend has changed. What happened? Maybe people bought from here, maybe they didn't. Maybe they took some profits, maybe they didn't. I don't know. But eventually, price broke that level, breaking the swing low. This now confirms that there's now a bearish trend happening. And then ultimately, the trend just continues bearish, making new lower highs, lower lows. And look at this one right here. This is also interesting. Is that we made a lower low here, lower high, lower low, and then we change a character. Market structure shift. Now this is where everybody's probably looking for buys for all those reversal traders. Because why? We made a high here. So people are looking for that reversal to buy up. But guess what? It goes down and breaks, change of character, breaks structure bearish. Why? As I mentioned before, you're looking at a massive bearish continuation trend. And there you think that this reversal pattern is going to change that trend? Maybe it could. Not a good probability though that it will. And then what happened? It continues and drops bearish. So these are the different market conditions and how market structure works, and this is how I trade the market, how I view the market. For those of you that haven't seen this before, I hope you gain some insight and knowledge. As you can see, everything of mine has a process. Everything needs to be step by step. Nothing is discretionary. I know my highs, I know my lows, I know what my pullbacks are, but for this case of this video, we're not focusing on pullbacks, we're just focusing on our market structure, highs and lows. So thank you all for watching my video, and I hope to see you in the next one. Goodbye.